In this video, I'm going to talk about the 1 hour pattern that nobody talks about. And once you understand it, you're going to see the markets completely differently. So stick with me. I made over $30,000 in just over a month and a half at 90 years old. So if I did it, trust me, you can too. And I did all of that with what I'm about to show you today. Also, I have another channel where I document literally every single trade I execute in the live market. So if you want to check it out, I'm going to put the link down there in the description so you can do that after the video. So here, once again, I'm going to just refresh this so you know that this is 100% real and I have nothing to hide from you. So basically, let's just get to the video. Okay, so we have some of the examples right here on the chart, and what I'm going to do is I'm going to first teach you how to do it. Then we are going to come back right here and basically go over the every single setup you can see on the screen right now. And the point of this strategy is that you don't have to spend whole day on the charts looking for the setups, but you can mark out everything, and once the setup is closed, every 1 hour you can just check on the chart, and if it presents itself, you can just take it, and that's it. Like 85 to 90% of the time it is going to win. And without anything further to add, let's just get into the setups. So I know you probably already heard of these two concepts, but trust me, in this video we are going to take completely different approach on how to basically look at them. So the first one we are going to talk about is going to be fair value gap. There is not a lot to it. It's basically pretty simple. You already know how to market probably. So it's basically this open space right here. So how do we look at it? We need 3 candles, as you can see. So 1, 2 and 3, and basically what are we looking is this gap in the middle like this. So all we need is this gap, and that's it. We have our fair value gap. So that is the fair value gap. It's pretty simple. Now what is liquidity? So let me explain you. So when we have some structure to the upside, let's say like this, basically what is liquidity? What even is it? So let's say we imagine some traders, some normal classic traders who are trading market structure, market trend. They are going to enter trades like this on pullbacks and target something to the upside, and they are going to place their stop losses on the most recent lows. And then same goes right here. They are going to enter the trades on some kind of pullbacks, some kind of retests of their zone right here, and they are going to enter the trade like this, put their stop loss below the low, and basically target something to the upside. So they're just going to trade like that. And what is liquidity here? What do we call liquidity? So liquidity is this place where they put their stop losses. It's all lows in the market and all highs in the market. So basically what liquidity is, it is people's stop losses and lows and highs in the market, because what is at the lows and highs? Just orders, stop losses. So pretty simple. So let me explain you what do these two do. So the fair value gap is basically used for market to reject to the upside. So when we come to the fair value gap, we want to see market always reject to the upside, but at the chart we are going to have very different approach. So I'm going to show you that later in the video, but fair value gap is always going to be looked at like this. When we come back to it, we want to see market reject and continue its trend. For the liquidity, we are going to do almost the same thing, except this time we are going to want to see it get swept exactly like this. So once this happened, once market comes down, sweeps it, then we get our entry model, which I'm going to get back to. Then we enter the market to the upside, and of course target some kind of highs, and to the upside it's not important. So the point of these two is that we are always going to look for kind of reversal from the fair value gap right here, and we are going to look for reversal after we sweep some liquidity to the overall trend direction. And also you're going to see the importance of 1 hour closures, because there is going to be so much noise in those 1 hour candlesticks that can literally mess you up so much if you don't wait for the actual closure. But more on that later. So now once we know what is fair value gap and what is liquidity, we are going to go to the next step, and that is going to be making the difference between A setups. So this right here is A setup, and between B setups right here. So basically the difference is going to be pretty simple. A setup is going to have both of these confluences together, and B setup is going to have only one of these confluences. So either it is going to have fair value gap delivery or liquidity sweep. And right now I'm going to show you exactly what we are going to look at. So this is going to be the A setup. So we are going to make structure to the upside like this, and let's say market is right here. So what are we going to look at? We want to look for some longs, of course, because market is heading to the upside, so we want to buy into the market. But how are we going to do it? We spot the low right here. So this is a pretty obvious low in the market, so we mark it out. And also what we spot is usually fair value gap is going to be resting right here on basically the previous leg of the market, and we are going to have some kind of fair value gap right here. And of course A setups requires both fair value gap and liquidity. So what market needs to do is basically come down, sweep the liquidity, tap into the fair value gap. So as we said, we want to look for the sweep of liquidity, and market needs to retest these kind of fair value gaps so we can enter towards the upside. But how are we going to enter the market? We are not going to just blindly enter off of here because we are just going to get stopped out so much time. We need to look for a specific pattern on the 1 hour, and that is going to be fair value gap, but that is getting inverse. So once we get a retest like this, a sweep and a retest of the fair value gap, we are going to look at fair value gap that got created right here for market to come up and to close an hourly fair value gap above it. So we need to have 1 hour fair value gap, and then we need to close actually with the candle body above this 1 hour fair value gap to confirm that we want to change the trend towards the upside. Because if we did not close above and we just clicked, market would just continue going to the downside and we just wouldn't get the trade. And that is why this strategy offers such a high win rate, because it is based on the simple logic. Because if the market wanted to go to the downside, it would never close above this because it wouldn't have enough power to close above it. It would just start rejecting and selling off of here. So that is the A setups right there. Now let's go over what the B setups are. So we had A setups, B setups. So we are trending to the upside like this. We have the basically the same price movement and we have this kind of structure. Right now we can either have liquidity right here, let's say, and then we have a fair value gap right here like this. And what market does, basically market goes to the downside, takes liquidity, and if market were to tap into this fair value gap right here, then we would have a setup if we get the entry. But market is just going to give us entry like this, so we are going to just get a inversion of fair value gap to the upside and closure right here. So this is going to be B setup. And then another scenario would be for us to maybe create something, let's say like this, all the way from the beginning. So we are trending to the upside and market does this, retests some kind of fair value gap, and then gets inversion fair value gap to the upside, and of course closes above that fair value gap. So these setups are going to offer around 70% win rate, which is still great, but there is of course going to be more losses than just A setups. And if you want to ask me, can you trade this strategy on the lower time frames? Of course you can. It works as well as on the higher time frames, but of course there's going to be a lot more noise. It's going to be way harder to execute on the lower time frames because markets are way more manipulative on those lower time frames. And also guys, if you found this video helpful, it will mean a lot to me if you can just subscribe and like the video. It's all free, but it would help me build this nice community of the traders who actually want to make it. Okay, so now that you know what we are looking for, we can get into these examples. So I'm going to put a replay tool right here and we are going to start all the way from beginning. And also I want to add that at the end of this video I'm going to give you something for completely free if you make it till the end. Okay, so first thing we see here is that market is clearly trending to the upside. It is just making highs and lows. So our first thought and our first idea is going to be that we want to get into some longs. So what do? We mark out the liquidity to the downside like this, and we mark out all the fair value gaps. So we have this fair value gap right here that we are just respecting, and we have this little fair value gap down here. Also, one good thing to be doing is go to the 4-hour time frame and look for some kind of these huge fair value gaps, which are going to be great because they are like 1 hour fair value gaps but on steroids. So they are going to be even better. So let's see how is market gonna sweep. So market swept this low right here, retested a 4-hour fair value gap, which is of course more powerful than 1 hour, because if you go higher with the time frames, the setups are going to be with less noise and just better overall. So what we are doing right now, we have liquidity sweep, fair value gap, so we have everything for a setup. So all we are looking for is the entry model, and as I said, last fair value gap like this, we wait for it to inverse. Let's see, we are still waiting, and right here we get the entry. So entry is only going to be once we close above this fair value gap, so no wicks, no anything but actual body closure. So we enter the trade, and now my advice for stop losses, never to go this tight on the stop loss because it will stop you out a lot of the time. Go either like really wide like this so you never get stopped out, or so like gain some experience on exactly where to do it. So if I were to take this trade alive in the live markets, I would put my stop loss right here and target exactly 1-to-1 like this. Why targeting 1-to-1? Because trust me guys, having 90% win rate and targeting 1-to-1 is literally the best thing you can have ever. And let's see how does it work out. So a little bit of noise to the upside, and there we go, a beautiful 1-to-1 trade. And let's see what happens after. So we are just consolidating and looks like it's gonna go to stop loss. So that's why I don't want to target huge risk rewards like this, because being able to take profits quickly like this in a few hours and be out of the market is is just beautiful, and it's gonna get you huge risk to reward. So let's right now see what the next trade is gonna say. So basically I'm gonna go all the way right here. So what do we have? The first thing we have right here is some kind of liquidity. So we have this liquidity and this liquidity. It's not that important. We are gonna mark out like this because they are so close to each other. Next thing we have is fair value gap right here. But let's see what is gonna happen. So if we play the market forward, you can see that we actually swept the liquidity right here. You can see that we are still respecting the fair value gap. So once we close below this fair value gap, we no longer have that delivery of a fair value gap. So let's see what happens next. So we closed below this fair value gap, so we can delete it because market is no longer respecting that fair value gap. We only have this liquidity sweep for right now. So let's see what the market is gonna do. So market actually right here took one more liquidity, but as you can see right here, we do not have any fair value gaps. So basically that means that this is a B setup because we only have liquidity sweep, we do not have delivery. And let's see what is gonna happen with this setup. So we get the entry and is gonna win 1-to-1, which is 70% win rate, as I told you guys. So B setups are still pretty valid, but they are going to lose quite a lot more than A setups. Okay, so let's go and see what this setup has to offer. So we can see right now instantly we can spot these huge fair value gaps to this side right here. Then we can also spot this liquidity level right here. So we have a lot of liquidity. Liquidity doesn't have to be too refined, it's just lows in the market. It's not that important, you cannot really miss it or something like that. It's always going to be obvious. So what do we have here? We have expectancy of liquidity, but as you can see on the hourly time frame, we inverse this fair value gap. So what do? We check on the 4 hour because you can see right here we actually did not disrespect this fair value gap, so we are still in a valid fair value gap. So what do? We mark out the fair value gap, we are waiting for us to inverse, and we just wait for the entry. And as you can see right here, we close beautifully above it, which means this is a nice A setup because on the 4 hour we are inside of a fair value gap. You can see this is the 4 hour fair value gap. We haven't closed below it. It's gonna be a little bit more complicated, but trust me, having the advantage of 2 time frames at the same time is just huge. So we have the closure, we have everything. Let's see how is it gonna play out. So beautifully, and at the end you can see if we replay the price right here, if we go to the 1 minute, this was news, but we actually spiked to the upside and then to the downside, which means this would have been a win because news are always following technical analysis. So if you want to trade during the news, you can, but do I advise it? No, because market is always going to spike up and down, and you really don't want for that to happen against you. Okay, so let's go to the next setup right here. So basically what is going to happen in this setup? So we have liquidity sweep, we can see it right here. We have no delivery actually, so we had this fair value gap right here, but you can see that we closed below it, so no delivery and only liquidity sweep. So what we are gonna do, we are waiting for this. So we got the entry off of where? Off of this fair value gap. And basically what is going to be with managing right here? So if we want to target 1-to-1, it's gonna be like this. We can put our stop loss down here, which is secure. We can go with it like this, but we always want to put a secure stop loss. But if the market crosses this, which is gonna happen for this setup, we have to either take profit or we put our stop loss to break even, because this is a very meaningful liquidity inside of a delivery of a fair value gap. So once we take that, we want to either go break even or take profits, because look at what is going to happen. Market is just going to go other direction because you can see that market is actually starting to kind of trend downwards because it respected this liquidity and this fair value gap. So you always have to play it secure. And let's go over to the next setup to see what it has to say. So basically this setup right here, why did we enter it? Because we had sweep of liquidity right here, and then if you look to the left, we did not have any delivery, which means this is a B setup, about 70% win rate. As you can see, this setup is not the cleanest looking, but is it valid? It is. So we did not actually have nice price action, so it closed it instantly. You can see like we went up and down, and basically closed it after like 1 day, and it is still valid. And of course it is not the best, the cleanest A setup because it doesn't have delivery. So let's see what happens, and it actually played out to the TP. And as I told you guys at the end of the video, I'm giving you something for completely free, which is my 10-page playbook. So in this playbook there is going to be a little bit more details about this strategy than I told told you in this video. So if you want to claim it, all you have to do is go down there to the description, and while you are claiming it, go check out the other channel that is gonna be Trade Recap channel, where you are also going to see my live trades that I execute in the live market. And while you are doing that, you can also subscribe and like the video so you never miss a new video on the channel. And also there is going to be a link down there if you want to get to work with me one-on-one personally. So if you would like me to personally mentor you one-on-one, you can go down there and basically check if you are the right fit for the mentorship. And basically, with all of that being said, I hope you enjoyed the video, and I'm gonna see you in the next one. Peace.